Welcome to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And on today's episode, we're going to talk about how to maximize the U.S. tax code as a high-earning W-2 doctor.
We're sitting there as a W-2 income earner, as a doctor, and we see all this money coming out on taxes on our pay stub. We're like, my goodness, why am I working so hard? We have doctors, members that are in California that are at a 50% tax rate. Half of what they make or more, depending on what other assets they have and what they're not doing to manage those.
If you're the person who doesn't need as much as what you earn, and you don't need to take that money down, as Bob will talk about, the income funnel. If you don't need that money to live off of, let's create a better plan. And one of the fastest ways to use more of the tax code is to be a business owner.
So guys, I've been having so many conversations with doctors every day lately, and this has been coming up a lot. So I suggested we make a podcast episode out of it. And up to this point with Terra Firma, we have grown our business through our networks and through referrals. But now that we've got such a solid membership offering, we're ready to scale this thing. So we are doing our first marketing funnel and some paid advertising, and it has absolutely blown us away. The number of quality leads and successful doctors coming to us, putting in their information, booking meetings with us, and entering into membership through this. It has just been so exciting. But, this issue has been coming up a lot because typically we have worked with business owners, practice owners, but a lot aren't a business owner. They don't own their own practice, but they're still earning very good money as a W-2 earner. They have a lot of excess income and they're not sure what to do about it. And so they're just paying a lot of taxes. Their CPA can't really tell them, much. So they're coming to us with this same problem. And so today I wanted Bob to talk us through what he does, Bob, what you do for those W-2 earning doctors.
Yeah, no, I appreciate that, Aaron. Go ahead, Joe.
So I just wanted to emphasize, you're not alone, doctor. The reason why I think these ads are performing so well is it's hitting on a pain point that is really felt by so many people, and they are stuck because their CPA isn't telling them what to do. And Bob, I know you've heard all the reasons why CPAs can't, give good advice, mostly because they don't know what to do about it. And so I'm anxious to hear what you're going to say, for these high W-2ers who are feeling all of them the same exact pressure.
Yep.
Yeah. No, it's interesting. And I think, we go through this process in our professional life that as we become more and more successful and what kind of deems that is usually money, right? I'm making more money. And that's kind of our test, the result and the reward of, I'm working hard, I'm being successful, and I'm making more money. But the reality is when you think about it, the tax code doesn't change. It is what it is. It's very stagnant, right? It's rules, it's laws, right? It's us that is different in what we do. And so the tax law is really just designed for business owners. And one of the things I've said before, I may have said it on on these episodes before as well, is that really when you look at the tax codes written for business owners, if you have less, meaning you're making less money, you have less assets, you're not going to need a lot of the tax code. You're going to need the tax code that is there written for you. It didn't change. It doesn't all of a sudden be less of the tax code because I have less. No, it is what it is. I'm what's different. Now, if I become more successful, I have more income, I have more assets, then I have access to more of the tax code. Again, the tax code didn't change. It is there. It's stagnant. But I change and I have access to more of it. Okay? And that's really how things work, right? If I'm happy, happiness didn't change. I changed, right? I mean, happiness is happiness. I mean, it's a very stagnant type thing. And so when we start talking with doctors, and really not just doctors, but anybody who's a high income W-2 earner. Now we're focused on our physicians, right? Because we feel like they're more in line with our core values of serving others, right? And so as a physician, you go into medicine wanting to serve others. Sure, you may want to make money depending on the specialty you go into, but you still have to serve somebody in order to return a dollar value. So that's very in line with us. So really it's understanding the tax code, and it's built for business owners. So let me break that down really quickly and to try to get as basic as I can. And then we'll dive into what is a strategy or two that we would do for a high W-2 earner. Is that fair enough?
Yeah, that's great.
Okay. Joe, and you've heard me say this all the time when we're talking about the tax code, but the tax code is our business partner. The IRS is our business partner. Now, when we hear that, a lot of times we have a negative reaction, right? Some people they just physically start twitching, PTSD or whatever. But when you think about it, as a business owner, as a taxpayer, we're in unison with the IRS, and they give us the ability to have deductions. So meaning that when I generate revenue, my expenses don't count as my revenue for when I'm taxed, only my profit. Couldn't they just tax our top line revenue? They could. In fact, some states do that. Some states tax a business's top line revenue, not the profit. So the IRS doesn't do that. They allow us for deductions. We have tax credits that we have access to. We have rebates and tax incentives. There's 4 different ways that we as business owners can actually save money on taxes. Well, why in the world does the IRS tax code do that? Simple. It's the flow of money. What's the adage? Follow the money. So if you and I as business owners have more cash because we're paying less in taxes, now hear me out. We are still at the lowest tax rate we've been in our history, but we feel overburdened by taxes. Why is that? What we're talking about right now. The lack of understanding of how the code is written as our business partner. We see them as our adversary, and therefore we don't try to understand our enemy. Right? What's the art of war, Joe? Sun Tzu. Keep your enemies close and your friends closer.
Other way around.
Yeah. So the other way around. So the IRS, they're not our enemy. They're actually our friend. But you still got to keep them close, and you still got to understand, because the reality is that if I'm going to save money on taxes, what am I going to do with that money? Well, the government knows that our business is our livelihood. It's our baby, right? It's our pride and joy. They know we're going to toil and fight and scrape and scrab and do everything we can to help our business be successful. Why? Because it's food for our table, for our family. It's protection. It could be financial freedom for our family, depending on what your goals are. You have family members that may work for you, so it helps your extended family as well, right? But it's part of the community. Our businesses are part of the community, whether you're a physician or you're an auto mechanic, right? We're all in the same proximity of each other, helping each other in different ways. So if I have more money, what am I going to do with it? Put it back in my business. And if I put it back in my business, what's going to happen to my business? It's going to grow. And if it grows, can I do everything on my own? No, I have to hire people. And when I hire people, I'm hiring W-2 taxpayers. And what did I say earlier in this episode? The less of the tax code you have, meaning less of the income you have, less of the assets you have, you get access to less of the tax code. So those employees tend to be higher taxpayers based on a percentage, because they don't have more to where they can have access to more of the code. Does that make sense?
Mm-hmm.
Yeah.
So if we're looking at it from this perspective, and we're sitting there as a W-2 income earner, as a doctor, and we see all this money coming out on taxes in our pay stub, we're like, my goodness, why am I working so hard, right? We have doctor clients and members in California. We're not talking about Fed. We're talking about a state with some of the highest income tax levels, the cost of living. We have doctors, members that are in California that are at a 50% tax rate, half of what they make or more, depending on what other assets they have and what they're not doing to manage those, right? So yeah, why wouldn't I be frustrated? So I guess the question is, what's the answer to that? Well, the answer is what I already told you. You need to be a business owner. Now, that seems really scary to somebody who doesn't want to own a business.
Yeah.
Seems really concerning to somebody who's like, well, I just kind of like my 8 to 5. I'm on call maybe one week in a quarter, right? I don't want, you're going to ask me to quit my job to go start a practice? No, I didn't say any of that. Mm-hmm. All I said was be a business owner. Well, what's that mean? The IRS and the government doesn't tell you what business you're in. We're not a communist country. You're not born and all of a sudden you are this and that's it. We get to choose. And that's the same thing with our businesses. What's the purpose of my business? No different than when we say, what's my purpose? What's my why? Like Simon Sinek says, why do I want to do what I want to do? I want to be a W-2 doctor. And I want to be a neonatologist. Awesome. Thank you. I don't want to be that. Thank God you do. Right? But that's it. That's my goal. Well, fantastic. The same is true for a business. Why? Because it's a separate persona. It's separate from us. And so that persona, a business, just like our dogs, right? We have dogs, they're smart animals, but they don't have the ability to reason. Nature takes care of it, right? They may go after something because they don't feel fear, but they may react differently based on their emotions, but they don't have the ability to reason like we do. Neither do our businesses, neither do our entities that the government gives us. So we got to tell our business what to do. So, for example, if I were to start a business, let's just say an LLC, we won't go into those details. You can check out our other YouTube channel, Asset Coach Tax Strategist, where we go through some of this different business entities. But if I were to set up a business entity and I'm just thinking there, I'm going to fund it with money that I have in a brokerage account, right? I have a Fidelity brokerage account and it's just sitting there. It's in stocks. I don't know if I'm real excited about it. I'm worried about what's going on in the economy. And I'm just not sure what I want to do. But if I were to take those funds and I were to put them into a LLC, that's no different than how I put them in a brokerage account. It's the same way I put them into LLC. It's a contribution. Now, in business terms, it's now principal or cost basis. Okay, we won't go into that detail either. Okay, but I'm throwing out some of these little verbiages so our members can go look that up if they want to fact check. But now I have that money now sitting in my LLC. What do I want to do? Well, the same reason why I had the money sitting in Fidelity, I wanted to invest it. So what if I were to buy real estate? What if I were to invest a portion of it in my brother-in-law's business? You can. And because it's an LLC, any of the results become revenue. Over here, it's taxable income through dividends and interest in your brokerage account. Or if you sell it, capital gains, which is taxable. Mm-hmm. Over here, it's revenue. And now all of a sudden we took this leap over the bridge and now we're on the other side of the river and now we get to use different terminology and revenue is not taxable. Profit is taxable in that business. So now all of a sudden I have revenue over here. I've set up a business to invest in other assets. And that also means that I have expenses for that business. The cost of setting it up, the cost of professional advice, my cell phone, my internet, my home office because I'm in my home office, right? All of a sudden I get access to other expenses that I may be paying personally. Now, some doctors, depending on their relationship with their medical group, some of these expenses the medical group may actually pay for or deduct out of their expenses, and the results are there. It depends on how they're all structured, their compensation. But from a very high level, these are all now expenses. Does that make sense so far?
It does make sense. And it's making, like when I just wrote down revenue is not taxable. So like you have this money and you want to invest in other assets. So instead of investing as an individual, you're just investing as a business owner, because I keep hearing, well, I don't want to be a business owner, or I don't want to make more work for myself, or I don't want to have a bigger tax problem somehow, because that's what they equate with that. But it's just like, in the eyes of the government, you're not actually doing more work. You're just investing differently.
Yeah. And you're investing it in your business that you said is going to be a holding or a management company or investment, whatever you want to call it.
Okay.
Right. And that's what's beautiful about it, is because, there's a saying that we have is, income is taxable. Cash flow is plannable. So when you have revenue in your business, it's now cash flow. Okay. And so now I can plan that cash flow. It doesn't become taxable income until the end of the year, and I have a profit or a loss or whatever the results are that flow down to me as a personal taxpayer. Okay. And again, all of that detail can be heard in our Asset Coach Tax Strategist YouTube channel, where we break down a lot of this stuff to help support this information that we're trying to share with doctors. So, Joe, do you have any input?
A lot.
Surprise.
You did so good by just sitting there. I saw you sitting on your hands.
Truly, so hard to do. There's a couple of things that come to mind for me. So your typical person who has never owned a business, or maybe they didn't even grow up with anyone entrepreneurial in their family, maybe it does feel intimidating to them. By the way, your CPA is the same way. And Bob, you've said this so many times, like the vast majority of tax returns that CPAs do in this country are for W-2 employees. So your CPA doesn't even know that there's more tools to use. They're not even familiar with them. And so I think that's an important distinction to understand, is like, just because part of the reason you're frustrated with your CPA is they just don't even know. Mm-hmm. They might know that the tool exists. They don't know how to use it. They've never had to pull that tool out of the tool chest to use before. And so I think that's the big thing, is like for people to understand, let me put it this way. If you're happy with how much you're paying the government in taxes, keep doing what you're doing. Like for some people, and Bob, you brought this up early on, the more you make, quote unquote success, the more monetary reward you get for the work that you're doing. If you want to absorb that into your lifestyle and just keep increase your cost of living because you're making more money, knock yourself out. Like, we're not going to tell you what to do with your money. But for so many people, they're like trying to do something different. They're trying to get ahead. They're trying to put away savings. They're trying to put away, money for investments. It's just not effective the way that they're doing it. So if you are that person, if you're the person who doesn't need as much as what you earn, and you don't need to take that money down, as Bob will talk about, the income funnel, if you don't need that money to live off of, let's create a better plan. And one of the fastest ways to use more of the tax code is to be a business owner. Mm-hmm. And again, I just want to reiterate, that doesn't mean that you have a new job and you're now the CEO of ABC Inc. It's just that you want to structure things the right way so that when you receive that money, it's coming to you the right way. Yeah.
It's almost like setting up a separate bank account, right? Because that's essentially what you're doing. It's still your money. It's just now in a different bank account, your business account. And some of the things, as you're talking, Joe, a couple of things popped in my head that some people may be thinking to themselves as they're listening to this, is that, well, how do I keep track of that? You don't need to. We do it. We do it for our members. So when a business entity gets set up, we have our bookkeepers bookkeep the transactions. So at the end of the year, we have all the financial statements, we have all the documentation, we have everything that had occurred during that year for us to be able to file a tax return, which our team will do as well, on behalf of that business entity. And we can include do your individual taxes, or you keep your tax guy, be frustrated, whatever. The point is that we're not just going to say, hey, do this. Good luck. No, as a member, we're embracing you. We know that this isn't something you know how to do. So why in the world would we tell you to do something and good luck, figure it out? Because like all of a sudden I just magically deemed you with knowledge? No, we're going to do that work for you on behalf of you so that you're able to reap the rewards of these actions, but also to start learning this process as well. That's very important because this is your money. It's not ours. Right? You hire us, you become a member for us to say, hey, here's how all of this is written, how it all equates to you. Let us help you through this process. And here's what we've done for our members.
And Joe said something about structuring things correctly. And that's something that it is very clear that so many of these doctors are out there doing their own research, trying to find different and creative ways to lower their tax liability. And so they're often doing one-off things, but then they're all kind of out there, their different assets and things that they're doing are little islands, and they're all being taxed at the highest possible rate because they're not structured correctly. Multiple people have told me, this is what I've been looking for. I've been looking for someone who can look at it all and structure it correctly. And that's what you do, Bob. So it's like a breath of fresh air and a relief to these people.
Yeah.
For so many people. And I think it also relates to being a doctor. A doctor who is myopically just looking at one piece of someone's health, they know, like if they're performing a knee surgery, they know, I just need to go in and fix the knee. It's all I'm worried about. I'm not worried. Well, probably worried about their blood pressure, but there are things that you're just not even thinking about. That's not your function. That's your CPA. They're not thinking about anything else. It's just, are the boxes filled out the right way? Did we submit this on time? They don't care about anything else that's going on. And that holistic nature to the work that we do, I think you as a doctor should understand how that plays in, plays into everything. Yes, if you're just a knee surgeon, great, operate on knees. But if you're taking care of someone's whole health, you better be paying attention to all of it. And if you're not, shame on you. And so I think sometimes CPAs will allow people to think that they're taking care of everything. And they just are. And I don't know why they don't speak up and say, hey, that's not my job. Like, that's not what I do. We'll tell you that, though. And I think it's important for you, doctor, to understand you've probably never had somebody holistically looking at your financial life the way that we do at Terraform. That's
great. So what's a good next step for someone who's listening and they're making a really good income? They have this excess assets sitting aside that they can play with. Bob, what is the minimum you think that one would need to start a business entity and then start taking advantage?
So I would love that question to have a very simple answer.
Okay.
But it doesn't. It doesn't. And the reason being is that it really depends on where or how they have other assets, how they're held. Is some of it liquid? Is none of it liquid? What's their earning potential? What's their spending potential? Meaning what's their personal lifestyle they spend money on? So to Joe's point, we're looking at the holistic nature of a particular physician. And from there, we can build a plan. Some instantaneously. Others, okay, there's going to maybe be a 2-year step process because of here's where you're at. And where are they in that? Did they just get out of residency and now this is their first real job and now they're making up lost time? They bought a house, they got a couple cars, they just had their second kid, right? All these other life events that occur, is that going to be a drain on the expenses as well? So again, I would love that to be a very
Did you guys see that?
I saw that. It was like a dragon came from behind you.
No, that's a moth.
That was a moth.
I live in Colorado, and this time of year, moths are. It's like there should be a horror film about Colorado at this time of year.
It's hilarious.
And I felt it go by me.
That was okay. Wow.
Oh, that was awesome. So it's really not an easy answer. It is something that we have a process. And so, Joe, what would someone need to do to figure out how we're able to help them?
Well, they just need to reach out to us. I mean, honestly, they can try to do this on their own. Go do a bunch of research. There are a tremendous amount of books that are out there. Bob, I think you've read all of them and written a few. So people could go do some research and just understand, the benefits of being a business owner. You could just do research on that. Or what was the company that had the easy button? Was it
Staples?
Staples. Or just hit the easy button. Reach out to us. We're happy to give you some of our time to help you understand, one, if we can help you. And if we can't, we can direct you to some resources as well. But
there'll be a link in the
easy button.
Yeah, the easy button.
Click the link below. If you're a doctor, click the link below.
It's that easy.
It's that easy.
Oh, All right. Thank you. That was really good. I appreciate the conversation. And yes, Doc, reach out and we can take a look at your whole picture and tell you the huge impact we can probably have. So I look forward to our next conversation. And until then, go be a wealth maverick.